Hey everyone, Jim Marous from the Financial Brand, the Banking Transform podcast. I am really excited about today's talk in our webinar because we're talking to Galileo and David Feuer, who I've known for years, and it's very interesting because we're talking about core conversions. Core conversions is like poison to financial institutions. They want to stay away from it. It's kind of like a no tread zone, but it's on the tip of everybody's discussion as to what is important to actually digitally modernize your organization. So while you'd love to avoid it forever, I think everybody knows we've got to bite the bullet and do it. Now, the good news is, compared to what this world was 5 years ago, even that recently, it is a whole different playing field right now. You have the ability to convert your core in ways never thought possible before and with a whole lot less stress and anxiety. Now, it's not the easiest process in the world, but it's important. And as we all know, and I say it in many of my events, change sucks, but it's all good for you. So, as I mentioned, I have David Feuer with us from Galileo. Get David, before we start, can you give a little bit of background into your background and where you've come from, and then we'll get into the conversation around conversion of the core.
Sure. Thanks, Jim. Dave Feuer. I've been the Chief Product Officer at Galileo for about 20 months now. Before that, I actually worked at Google. I was the head of product management for Apogee, which is the API management platform at Google. And I also had built Google's payment gateway, focused on open banking ecosystems such as UPI. So got to know Derek White, who's our CEO at Google. We worked together there, and I've really enjoyed working for him ever since.
So, let's start at the beginning. I mentioned at the beginning how stressful it is to think about converting your core, but the reality is most financial institutions, I'd actually say around 80% of them have basically legacy systems working in the background. And as Derek likes to say, we've got to convert behind the glass in order to have the top of the glass actually work, to have the ability to say, this thing looks and feels the way it should. We've been doing it in all kinds of ways, but every time we try to modernize the front-facing elements without modernizing the back office, we're going to be in a difficult situation because we're just cobblestoning it together. So, we have a lot of legacy banking architectures out there, and they remain stagnant. How is the modern core architecture today helping banks evolve to the needs of what's needed for not only a digital first customer, but a digital first organization?
Yeah. So I think we need to start with our systems really the problem. And I want to shift that because systems both are and are not the problem. And by that I mean the ultimate problem that I think banks need to focus on and banks recognize that they need to fix is the digital divide, which is to say, how do I take my monolithic legacy infrastructure and orient it such that I can meet customer demand at the speed that customers are expecting it? And I think that's a huge challenge. I think, the Cornerstone Advisors last year had this study that talked about, 47% of all new checking accounts were captured by fintechs. That's almost half of all new checking accounts. And that tells me that fintechs and the neobanks are doing a better job of addressing customer demands and customer expectations around onboarding and signing up for accounts and the digital experience than the legacy banks who have been doing this for much longer. And so that tells me that there's a digital divide to be addressed. And for a long time, we tried to address that divide through a whole bunch of different systems, two-speed IT, and we can certainly talk about that. At the end of the day, I think what it comes down to is that neobanks and fintechs have the opportunity of new, fresh infrastructure and architecture that's been built in a cloud-native manner. It's not monolithic. It's not based on sort of legacy end-tier architecture principles, but it's based on more modern principles that we can talk about, such as mock, microservices, APIs, and headless and the like. So I think when it comes down to it, the question is, as a large financial institution today, is your infrastructure holding you back? And if it is, how do you better focus on meeting customer needs so that indeed customers turn to legacy financial institutions and not just to neobanks and fintechs to get the digital experiences that they expect?
So, David, it's interesting because As I mentioned before we even got on the line today, is that it's not a bank out there, a credit union out there that doesn't know they need to modernize their core system. They know that that's good for them. They know they need to do it. They may even have it on their planning calendar. You're out in the field quite a bit. What is it that holds organizations back from doing what's good for them? Is it money? Is it time? Is it culture? Is it a combination? What do you see as the primary reason why people go, gosh, yes, we have to do it? Not today.
Yeah. So I definitely think it's all the above, but I think all that's intertwined. And I think in order to really understand it, we'd sort of have to look at sort of the history of how a lot of this evolved, right? What ended up happening was, there's sort of this core banking architecture that looks a lot like it did in the 1960s, right? I think that the racks are shinier, the disks are faster, but there's still these like refrigerator style hardware things running somewhere, right? And that style of engineering died a long time ago. I think like the early 2000s, right? So we've since evolved into new ways of quickly building and deploying applications. But financial services has struggled to keep up with that paradigm. So, like as a retailer today, right? If I want returns or inventory refresh, I used to need to buy these modules in order to enable that functionality, right? They had this heavy legacy ERP system and it took many months to upgrade. But like retail's moved past that. And if I want returns today, I've got a bunch of options, right? There's obviously the, Shopify, Commerce Tools, BigCommerce, that whole world. And then of course there's the API providers that have API products that do this. And I can simply, in a very headless way, integrate with those API providers. So that's sort of the mode modern cloud-based developers are expecting to build in, right? But if you look at banking cores, like the Gen 1 and Gen 2 providers, they still operate in that ERP mode. It's like if you want checking, that's a module. You want savings and CDs, that's a module. You want lending, you want escrow, those are all modules. And by the way, each one comes with a hefty price and a hefty integration effort. And so I think Conway's Law helped make those modules into different silos. So now we have different teams across payments and deposits and loans that kind of own those different modules, right? And that further creates challenges working together and sort of creating an omni-channel approach that looks across all of the data and the entire total customer experience to say, hey, here's what we want to provide to this customer, and here are the journeys and the friction that we're trying to solve. So I think what's really holding back banks is a mix of all the above. It's organizational structure that's a direct reflection of sort of the way the legacy cores used to work. And of course, the fact that many of these banks have 40 or 50 years of applications running in front of these legacy cores that they would need to modify in order to move to a new core in a big bang fashion. And I think that's probably the biggest misconception I see in the industry when I talk to banks about core migration and core modernization is that there are other ways to do this. You don't have to do a big bang migration, and you don't really have to think about things in terms of infrastructure. You can focus on customers and customer problems and really build an iterative approach that helps you create business achievements that are in line with sort of the business spend and the TCO of the investments you're making, so that this is not an infrastructure project. Rather, this is a very customer-focused business enabler. And I think that's probably the biggest challenge, is that banks say, okay, I have to replace all of this with all of that, as opposed to saying, what are the customer problems that I struggle to solve today? What are the pieces that I need in order to solve that? And can I get another provider for that? The fact that it's a core provider is sort of irrelevant, right?
Yeah, it's interesting because you talk about the cost and the culture and just the scope of a core conversion. You just addressed a little bit of what can be done when you break these things apart. But let's break into the cost first. It's interesting because a lot of organizations go, economic uncertainty right now. We have a lot of things going on. The cost of a conversion is going to be overwhelming. But can you explain that basically the cost of a legacy system is much more costly than the cost of an upgrade?
Yeah, I think there's a few points there that are important, right? I think the first is that the we tried to solve. Actually, let me take a different approach. We know, right, that banks running on outdated cores estimate, I think it's somewhere like 10 times or more, or 10 times
Yep.
more expensive than those running on modern cloud-based banking cores. And I think that gets expressed in multiple ways. It gets expressed in the time it takes to deploy new products. There's a whole cost benefit analysis around not being able to ship certain products because it costs so much to launch a product in that iterative nature. And then, of course, the inability for those monolithic systems to be able to directly capture market demand. So the ability for, let's say, to do iterative CI/CD, the continuous integration, cloud-based manner of development that would normally see new iterative application improvements on, let's say, a biweekly basis, that becomes a 3-month to 6-month turnaround because new core release, new heavy application releases with middleware require much more stringent Q&A processes, and sort of all of the challenges around monolithic systems hold back development cadence, which means that the bank misses market opportunity. It misses the ability to capture customers at key moments in their journeys because those journeys evolve, and frankly, it just the TCO ends up being much higher, both from an infrastructure perspective and from a cost-benefit analysis perspective. So what happens is the cost of operating, administering, and maintaining infrastructure is arduous, is very high. And then the cost of missing those business opportunities is also very high. Those conspire together to create an extremely expensive environment to operate in. And like we know the cloud, and by the way, there's all kinds of secondary effects that are worth thinking about in terms of talent acquisition and retention. It's hard to hire COBOL programmers today, but every computer science
certainly not going to get many in the Gen Z or the Gen X generation. You're not going to find anybody in COBOL there.
Exactly, but every Gen Z, computer science graduate certainly knows about modern cloud development practices and ML and these sort of more modern technologies that help focus on customer and the customer experiences. So all these challenges around an omni-channel approach, a data-centric approach, a customer-centric approach, and creating an environment where developers really thrive, they all conspire together with the cost of running that infrastructure to miss business opportunities and cost banks untold amounts of dollars.
Well, I go back decades in banking, and changing a core was always the thing that everybody would always talk about, but also be fearful of, because you'd almost have to shut down the bank for a number of years to be able to do it. In fact, I still know some banks right now that are going through core conversions for the last 10 to 12 years, which is insane. That you mentioned it, that's no longer necessary. You don't have to do it all at the same time, and you don't have to set aside everything you're doing currently to convert the whole core. Now more than ever, you have the ability to embrace composable banking solutions that not only embrace, like, let's say, a digital banking platform, but the core itself. What kind of capabilities, what power is that brought to the industry where, if you wanted to convert to your platform, for instance, I can say, here's my primary challenge I have that I want to address with my consumers. How do I take care of that part of my core?
Yeah, so I think that ends up looking a lot like, we basically have two models of core augmentation, which is to say, not a big bang core replacement, that we tend to see quite frequently, right? Because the recommendation that we have is focus on the customer problem. Let us help you solve that customer problem and launch a new business, and not focus as much on the infrastructure. Of course, we can, and we're involved in a number of core migration efforts, but I do think that that's challenging for banks for all the reasons that you just mentioned. So like figuring out what are the sorts of ways we can help a customer launch an independent product line. And sometimes it's a new product or a new digital subsidiary, right? The sort of the sidecar, the side-by-side method, that's super fun. And it's really actually quite enjoyable. And I think it all comes down to basically four technologies, which are mock, right? If you're microservices based, if you have a strong API layer, if you are cloud-based and you support headless, I think, which, the MACH of mock is microservices, API, cloud, and headless. I think helping banks build applications in a composable and agile way requires those technologies. And those are sort of the four key themes that make up a Gen 3 core. I think if you have those themes, you're able to create a unique environment. And I think if we think about the digital maturity gap, and we talked a little bit about talent acquisition and sort of the challenges in building what the next generation of your bank has to look like, right? And it's not just, of course, the run the bank, which is sort of the infrastructure cost. It's the build the bank. It's the new products and introducing new products. I think it really comes down to two things. The first is creating an environment for bank developers where they're thriving, right? So that's like modern computing paradigms like microservices, the APIs for composability, which is, you mentioned composition journeys. Like when we had to build BNPL, our buy now, pay later product, we leveraged Galileo's core, which we used to call Cyberbank core, and that did the interest calculations to set up the account. We exposed the API using Galileo's developer portal for API products, and then we launched it, right? After that, we were able to quickly iterate. So we had SMB BNPL and post-purchase BNPL and card to loan and the like, because like we had a clean architecture and it was all in the cloud, and we could just simply incrementally build and deliver new and related services. And so that mode of development is a mode where developers thrive and they can quickly test, deploy, increment, etc. So I think that's super important. I think the other one is there's sort of the albatross of infrastructure, right? So talking to CIOs and CTOs, I think a lot of the time that they spend working on the business is really working on infrastructure and integration. And it's not as much about customers and what the business needs to be successful. So, what we tend to recommend is sort of, build an environment where your team can focus on the challenges that are core to customer-centric banking, and the customers will follow. And by doing that, you don't have to replace your core. You can augment your core side by side, launch a new type of CD, launch a new product like BNPL, launch whatever it is, right? Focus on the customer. And that helps really bridge that digital divide, because you can then focus on shipping at the speed the market expects, and then migrate your infrastructure at the speed that makes sense, frankly, for your CFO and your market economics, as opposed to the big bank strategy, which is like, you're either running on one core or the other, right?
Right. So David, let's say you're going into bank XYZ. You're going to be in charge of core conversion. Okay. Let's assume I'm going to say it's a typical financial institution. So whatever you want to consider typical. And let's figure that the organization does not have finances to, I call it rip and replace the old core for a brand new core, but they have to start somewhere. Where would probably be your place you'd start that allows the organization to, number one, build the foundation for learning what a new core is, what it means, the dynamics of it. Number two, will probably generate the best return on investment in the near term. And number three, will not be an overall lengthy process. In other words, you want to introduce the organization to where they should start. You want to do it at a point where it's not going to take forever to get it, so they're going to get some speed involved there, and it's going to have a direct impact on the consumer and on the bottom line. Where would you start?
So, the one thing I will say is that a lot of the time the banks want us to recommend where to start. And I think it's a funny conversation, because I'm not that bank. I think that bank knows their business much better than I do. So the banks are going to know where their pain points are, what their customers demand, where there are gaps, where they're churning out customers to competitors, and for what reason. And so my first recommendation would be, can we partner to look at what are the key areas of your business where you feel there are gaps? And those might actually be far outside of what you would traditionally think of banking core services. It might be things like real-time money movement, right? It may be things like pooled accounts. It may be things like new channels, right? Maybe that bank wants to become a sponsor bank, and they're currently really only focused on consumer retail banking, or maybe they want to enter SMB. So I think a lot of the work is really sort of figuring out where the biggest business problems are, because at the end of the day, the entire purpose of the technology is to focus on and support the business. And so I think we as technologists don't spend enough time saying, hey, what does the business need? What do the customers need? How can we get there? And so that's sort of where we start the conversation, right? That all being said, we talked a little bit about the independently migrating product lines and that approach. And I certainly think that works, particularly when the products are missing key features, key functionality that customers need, and so they go elsewhere for that, right? And kind of typical, if it takes 20 plus 30 minutes to sign up for a new account, where in the neobanks it takes 2 to 5 minutes, then maybe we should talk about account onboarding and talk about how to do that in a more efficient way. Classic,
So David, let's take that as an example, because it's a great example. Because I was just at an event. I think every organization I met was saying the thing we've got to do, we got to fix our new account onboarding, the new account onboarding and the opening process. We got to move from 15 to 3 to 5. So that being said, from a core perspective, because you want to get the core right before you try to build the experience, because you're going to be held back otherwise. How long have you seen organizations take to build the core that allows for a good modern account opening process and their deployment process? What's the time and what's the effort that's required?
I would say it really depends on the organization, and it's hard for me to give you a number of months, and I'll tell you why. Different organizations have different interaction mechanisms internally, and some of what I've seen in banks is really sophisticated, complex, and elegant, but quite arduous to integrate with because there's multiple systems, right? There's a GL, there's an LMS, there's different businesses that need to be notified. Of course, there's all the regulatory stuff, AML, and this whole the whole customer information program, and OFAC check and all of that, right, can be quite complex systems that require integration. And so the problem is actually not standing up the core. The problem there is integrating with those legacy systems. And so
Yep.
I find banks come back and say, well, should we replace those systems or not? And I think there's an analysis that has to occur there. And then, so that's one piece of the puzzle. And then the other piece of the puzzle is, what exactly are you solving for in the onboarding experience that's taking so long? And can we identify that? And what I found is that banks actually don't know. It's really hard to figure that out because there's 200 things happening and there's interdependencies that were created years ago that no longer have to be there, that might be there. And that actually has very little to do with the core, but the core can be a great venue by which you can reassess those sort of BPO flows and say, hey, we can greatly simplify this process. So I've seen, when we wanted to launch our some of our services internally using the core, we were able to do it extremely quickly. I'd say in less than 2 months. But that is particularly unique because it's our core and we're intimately familiar with it. And I would never suggest to a bank that they could do any sort of core product from scratch in 2 months. But I don't think this is a 2-year thing. I think you should expect to see value in a short period of time, in a time that's managed and monitored on a quarterly basis and not a yearly basis. And I think that's probably the right resolution to get started. Get something small up and running, get experience with the core, get some value, and then see how you can iteratively increase the value proposition either in one product line or multiple product lines. And I don't think, by the way, it's just products, it's services as well, right? It might be real-time money movement. It might be channels. I know we talked in terms of products, but from a bank perspective, it could be multiple things we're doing. And so it doesn't necessarily have to be a side-by-side migration. It could also be core augmentation, right?
Is it fair to say that when you look at timing, when you look at the difficulty in converting a core, that sometimes, and you're not going to say it because you aren't going to blame the customers as in the financial institution, but is it safe to say that in many cases, financial institutions get in their own way because they hold on to some legacy things that make the real core less effective than it could have been?
I think that's fair, but I don't want to blame the financial institutions for holding on to something, right? I think because banking is such an important part of society, I think once we find something that works and is reliable and works well, that's something that we tend to hold on to and say, okay, we have something that's stable, working, solving customer problems. Let's not change it. And so I think a lot of sort of holding on to the way things work is done because those are established patterns that have been established over decades, and it's hard to move away from them when they work so well. I think the challenge is when they start to not work so well. And that's when I think actually banks start to ask very openly, is this the right thing to do or is this not the right thing to do? So sure, are there patterns of using Gen 1 and Gen 2 cores that could probably increase their usefulness? Absolutely. But at the end of the day, the monolithic nature of those cores still means that you're sort of living in this two-speed IT world, trying to quickly iterate at the edge of your network while being held back by this core that's monolithic and slow at the core of your network. And I think, that worked for a little while, but at a certain point you start to say, hey, I've got to make changes in the core. I can't iterate quickly in the core. What if the core was part of my edge? What if I had a flat infrastructure, which is a more modern microservices-based infrastructure versus the old n-tier infrastructure where you sort of had back end and front end? And I think that is where banks start to say, hey, if I had that, we could do something really different and change the pattern of product development to better match sort of what peers are doing in other areas of this industry and other industries versus sort of seeing an established pattern and saying it works, don't touch it.
So David, as I mentioned, last week I was with a lot of bankers, probably 500 bankers. And one of the questions that came up and one of the discussions that were had was, many organizations are trying to replace or modernize their core. Some are trying to modernize their modern mobile banking platform. Some are doing both. If you were to say the order of which it should be done, I know what I think is logical, but the thing is, I'm not that person that knows the technology side very well. So if you were to need to do both, would you modernize your mobile banking platform first? Would you modernize your core first? Would you modernize them together?
I don't think there's any way not to modernize them together. And I'll tell you why. It's because when we have the two-speed architecture as kind of the main way of enabling agility in banks and in infrastructure, it didn't work. I mean, it worked for a little while, right? You could do a certain amount at the edge of the network, but at a certain point, it's like you want to introduce a new product and you need a new way of calculating interest. You need a new event type. You need a new way of creating a fee. I mean, all of these sorts of things that required you helping settle customer accounts in a core required iterating the core, and that obviously held you back by the core's development sort of cadence. So I don't think there's a world where you can say, oh, we're just going to modernize the edge, but not modernize the core. I don't think there's a world where you just modernize the core and not the edge, because that's focusing on infrastructure. And I think if we focus on the customer and customer problems to solve, you're going to have to solve that that customer friction at every point from the front end customer experience all the way to the back end core. So I think thinking about this in terms of infrastructure modernization is a legacy framing. I think we should think about this in terms of speed of solving customer problems. What are those customer problems? And then how we line that up. I don't think any of this says I have to replace my whole core right away. I have to replace my whole, edge digital application right away. I think part of this is saying, what are the pieces along the supply chain, or rather the value chain, really, right, of how we serve our customers a given product? What are the pieces that I need to change? How can I change or enhance them in order to launch this new product or service? I think that's the better framing, and it gets us out of thinking about infrastructure and forces us to think about customer friction, and really building a new value proposition. And that's really what we're seeing with most of our customer interest today. Is the customers are saying, they of course they have 1,000 problems, but here are my top 5 problems, and the core is a big part of it. And we can certainly build a custom application, a sidecar application, a new customer journey. That's the easier part. But once it hits our back end, everything gets frozen. So how can you help me sort of modernize everything on my back end so that I can match sort of the speed of cloud native development that's happening in my application layer with the back end core, if that makes sense.
You mentioned the consumer in every answer you've given me, and that's good. And you need to know what your North Star is going to be, where you're going to get and how you have to get there. Yet we're talking about possibly splitting up these into iterative and composable solutions. How do you balance the need to do things that are manageable with the speed of customer change? Because the last thing you want to do is do it in a composable way that maybe takes 3 years when the consumer's demands are changing almost daily. How do you balance those two against each other?
Yeah, I think that's the gig, right? I mean, if I think about like what it means to be in digital banking today, right? It's trying to figure out, how do I take the intersection of rising customer demands around constant enhancements, customers complaining about things changing and not being able to understand intuitively how to use the bank. On one side, customers want a bank to disappear and only be there when they're needed. And on the other hand, they want the bank to be there for wherever they're needed in the customer's journey in a bunch of varying contexts. And so I think, there's a few different rules that banks have generally adopted that make sense. For instance, when you introduce a new product, you don't completely change the whole landing page, right? Or home screen of an application, because that's very confusing. You do things like design and UX research and studies to make sure that when you do release something, it's intuitive and understandable by the customer. And that's why we have sort of, we have design practices and UX practices and product management practices, because at the end of the day, it does get quite conflicting, where customers want a lot of iteration, but also want stability and sort of to intuitively understand everything. And I think the banks that are able to figure that out do it brilliantly. And that's, I think, part of the that study about checking accounts, that neobanks are really figuring it out. And that's because they're in this cloud native environment, cloud native mode. And so they're able to better mimic, things like the social media companies. I mean, we expect sort of a new refresh of, Instagram or whatever to happen on a bi-weekly basis. But we don't expect that. We sort of expect that from our banks and don't expect that. So when we see it, it's refreshing. It's great. It creates new engagement and a new perception of the brand of the bank as being in tune with my needs and sort of building new experiences to help me on my journey. And so I think as we develop for customers in a customer-centric fashion, and this particularly is something that I see with the sort of new SMB focus that we're seeing in the market, that banks have recalled how much SMBs are sort of underserved and really need the focus from us, and how many new applications and services should be available to SMBs that aren't necessarily available. I think when we think through that and sort of look at those experiences, I think the two ways of really creating an environment for users that makes sense to them is, one, creating an application experience that builds trust, and that's around stability, and that's around, again, iteratively developing, but not completely changing things like the home experience, and creating ways of navigating the application that are intuitive and all of that. And I think along with that trust comes really changing the brand of the bank to be more dynamic and focused on the customer. And so building the application stack where a customer kind of knows if they call customer service, if they use the disputes customer service functionality within the app, if they're talking to an intelligent digital assistant across all the channels, that the bank has a consistent and stable approach to providing you the information you need when you need it. I think all those things together help build reliability and trust. And so changing things iteratively, but not massively on a regular basis, allows for that balance.
So an organization that's looking at converting their core has an existing core. We're not going from nothing to something. We're going from
Right.
something to something. Those cores are usually with their core provider that they've used for decades. I mean, or longer, if you can look at it that way. The reality is, at some point during this process, you could say they're double investing, because it's not like the cost of the old core goes away immediately, and you have to justify the new core. How can the business case be made to basically double down on modernization? How can banks measure the ROI on what's being done? And, put another way, what are the costs of doing nothing and just waiting for your core provider to modernize their own systems?
Yeah, so I think there's a few ways, right? The first is there's obviously the infrastructure cost. And if you're moving to a more modern hosted core, there's obviously a reduced TCO there that's usually fairly straightforward to manage. There's no more servers, there's no more knock necessarily. I mean, all of those things are alleviated. And so that TCO calculation is fairly straightforward. The second is usually there are estimates for building new products and services. And so you can look at the average estimate for 5 services on the legacy infrastructure and what it would cost to build those services in the core. And typically those are specialized programmers, as mentioned, right? COBOL and MUMPS and all these languages that are not really modern cloud-based languages that you don't have a ton of talent available for, what it costs to build those services in those contexts, and then look at what it would cost to build more modern services in a more modern application. And that gives you a fairly straightforward cost for production, cost of production, right, for your service. And then we can talk about sort of the cost benefit analysis in terms of velocity and say, my time to revenue has shrunk by quarters, my time to market has shrunk. What's the value in terms of customer churn and customer satisfaction? And what's the value in terms of being able to produce more and capture more business? And I think all of that is, I don't want to say straightforward, because I realize banks are these very large, complex businesses, but certainly on a business line by business line perspective, each business line is already sort of looking at these metrics anyway, usually as good hygiene and a good way of figuring out which IT projects to invest in. So really lining those up, and that's something that we partner with customers on frequently, and sort of helping them identify those first projects to use for migration, helping them understand the total cost of ownership. But we're looking at a huge divide. I mean, when we talked about the well, you mentioned the 10x TCO. I mean, I think that that's very real and becomes very obvious very quickly because we know how to manage infrastructure in the cloud, and we do that at scale every day. And banks struggle with that. And so being able to do that for multiple banks is our bread and butter, and it's not necessarily something that the banks have to do anymore. So being able to alleviate that from the banks is a significant cost saving as well.
So it's we talk on the fringe of things. We talk about customer experience. We talk about all these product line issues and all that. At the end of the day, the biggest threat to a financial institution today is not satisfying your customer. It's messing up on the security side, messing up the fraud side, and the risk issues. Let's talk a little bit about what the difference is between legacy systems and modernized cores opportunities out there today from a risk and fraud perspective. How much more secure is a financial institution with modern core technology as opposed to what is continually being fixed in the traditional legacy system?
Yeah. Uh, I love this question because it's something that I struggled with in the past as well. Because intuitively, you would think banks always wanted the most amount of control in order to ensure and uh, uh, reliably testify that they had the most amount of security possible, and that's security in terms of reliability and resilience and risk aversion and all of those sorts of principles, right? When it came to their infrastructure. And something really changed with the advent of the cloud providers in the last 10 years, where I think banks realized, the cloud providers hire the best in breed of and leverage best in breed security practices, and they know a whole bunch about security and are able to do this at scale, oftentimes better than the bank. So, for instance, a huge security risk is getting physical access to machines. And we all know that the cloud providers are very good at maintaining and reducing physical access to machines. Where, for instance, banks may have data centers that don't offer as great protection against physical access to the machines. Things like geo-redundancy, availability zones, and regions. I've talked to several major banks that have multiple data centers, but they're all in the same geographic region, which makes them subject to some very specific risks. And that's sort of something that the cloud providers have already architected around with multi-availability zone and multi-region deployment patterns. And so what we're starting to see is that the cloud providers actually take a very sound scientific approach towards a lot of this, and the banks are able to sort of decide how much of that they want to take and how much they don't want to take. And I know we're talking about the infrastructure layer and resiliency, but of course this also gets elevated to the risk level, where things like cloud level logging and auditing tend to be a lot better and a lot more fine-grained and a lot less subject to developer error than when developers have to do auditing and logging themselves of their own services, or they create their own bespoke horizontal services to do that may miss key events or may not write in certain scenarios and whatever else. So being able to leverage all these horizontal services from the cloud providers actually creates a whole bunch of value for banks, because the banks not only do they no longer have to build it, but they can rely on the services that many other financial institutions and other regulated institutions are using. And in that way, sort of understand that what they've got is actually better than what they had before.
Boy, David, you said it all so well, because, I look at the fact that you mentioned 5, 10 years ago with the cloud introduction. I mean, for the first 5 years of cloud, everybody was more concerned about the security of the cloud more than their legacy system. They're saying, you know what, it's going outside the bank. It's all these other issues. And all of a sudden they started realizing that, very much like a piece of plastic versus a mobile phone, as far as authentication for a credit card transaction, you go, you know what, now it all makes sense. It's a whole lot safer the other way. But I think it's important to note too, and this is not my field of expertise, but if you're a new technologist, a new person coming out and working in the technology field, in the security field, which there's many, many, many people going in that field, they're not coming in to support legacy systems. They're out there trying to make the cloud system stronger, because that's where all the modern technology is. Just as importantly, and I think this is something we lose, is the ability to respond when something happens is easier in a cloud environment, because as you said, more and more organizations are in it. 80% of what's in that system is the same for every organization, no matter how much people say our bank's different or our credit union's different. The reality is 80% of it is exactly the same. So anything from a response basis is going to obviously be easier and faster in a cloud environment because that's where the thought leadership is today. It's hard to describe it any other way than the fact that, when you've cobbled together a legacy system to fit a modern deliverable, you've done a whole lot of things behind the scenes that you couldn't retrace those footsteps if you wanted to. You
So
can do that in a cloud technology, can't you?
So 100%. And I also think there's a secondary effect there that we don't think about, where there's a whole suite of tooling like PagerDuty, right? And outage management tooling and all these things that help with managing resilience challenges. And they're all generally third-party services that have APIs and integrate with the cloud providers natively, but are not necessarily integrated with bespoke and legacy bank infrastructure. And so being able to choose from all of that tooling and leverage all of that also helps with response times and escalations and sort of keeping the important people in the know. And of course, when it comes to customer notifications and all that, that's also tooling that exists off the shelf that banks can now leverage that they couldn't leverage as easily in the past if they even could. So I think there's secondary effects there also, which is there are ecosystems of tools that help create a richer environment to be able to make sure that IT professionals inside the bank can sort of manage and monitor that infrastructure and respond when there is a challenge. Business professionals inside the bank can be aware of those challenges and define what to do in terms of escalation, customer notification, how to fail over and let's say invoke stand-in processing or active passive sort of switching and all of that. I think that whole ecosystem is underappreciated and something that comes naturally when you're in the cloud and does not when you're in bespoke on-prem infrastructure. So that's worth noticing as well, is that the whole suite of management tooling around operating, administering, and managing services is suddenly interoperable and works out of the box.
So for those that don't already have a modern core, right now everybody's a shopper. Everybody's shopping for a core provider. And organizations have to figure out, where do I start in that process? Because I don't know what I don't know. And I tend to, as a banker, overcomplicate what the process is going to be. If for no other reason than we forget, and this was said really well to me about a year ago, said, you got to remember that a core, about 80% of it is all the same. You have to really focus on the 20% that makes it different for your organization. So I'm looking for a new core provider. What should I be looking at when evaluating who I should partner with? And where, how do you begin that digitization journey?
Yeah, so I think, as we've talked about, right, certainly looking at a Gen 3 provider makes a lot of sense, because I think it all comes down to, and you've alluded to this multiple times, right? How do you create an environment where bank developers thrive and bank developers can really move at speed and urgency to meet the needs of the business? I think that's key. It's something you're only going to get today with Gen 3 providers. And I think thinking about sort of what are the problems you're trying to solve and then how the Gen 3 providers can help, you'll inevitably come to the conclusion that we're the ideal company to talk to. But that's the first thing I'd start with, right? Which is to say, are you a provider that's going to create a modern environment for my developers to be able to act with urgency and speed to meet the needs of the business? I think there's a few other things. I think figuring out how to evaluate a core provider as a partner and their experience in multiple markets across multiple products, and their experience sort of working and understanding multiple domains where it's not necessarily just core banking, but other areas of banking and payments. I think that's super important, because the more we look at the expectations of a bank today, the more we see sort of a cross-pollination and a blurring of the lines between sort of the payments world and the banking world and financial services and neobanks and embedded finance and all of that, where banks are being forced to operate in all of those domains, compete in all those domains. And so finding a provider that can provide solutions in those domains is extremely important. And so I think sorry, go ahead.
Oh, go ahead. You're good.
And so finding a partner that sort of understands the domains, understands what developers in a bank need, and then understands how to identify business problems and go solve them and get creative in that way and can sort of partner with you and work with you. I think that's key. And that's key to how we work, and that's the way we think about our banking partnerships. And so every time every time we participate in an RFP, I think about this. It's like, how do I express to this bank that this RFP is a very two-dimensional way of assessing our technology on a spreadsheet? How do I say, but there's another dimension here, which is the partnership dimension, the human element, where it's sort of like, we've done this before, we know what we're doing, we operate in multiple domains. How can we share our best practices with you so that we're in sync and working in partnership, and it's not just a vendor relationship?
You were saying the same thing I was going to ask, because I think more than ever, when you're working with partners today, the good news is most of these partners know how to work with other partnerships you have in place. So that's a key element that wasn't in place 5 years ago, because we were all fighting each other. We're all trying to get into everything, and that doesn't work very well. And I think, from my perspective and seeing organizations that have succeeded and ones that have lagged, and I don't know of anybody myself that it's not been a success. It's just a matter of how quickly it's been. You said it very well. It gets down to trust. Who's going to be able to run down the field on your behalf, not with you? Because we tend to want to hold on to the ball at the same time. And I'll use American football as an example. If you have two people running together trying to hold a football, it's not going to work very well. You're going to be slowed up. You've got to have trust in your provider. Say, I'm going to trust them to get to my destination on my behalf so that I can manage them and other components that are so important today, because we don't have enough time. And if we have to be involved in every step of the process, as opposed to relying on our partner to get us there based on the knowledge they have, it's very important. And I think most importantly, nobody can be the best at everything. There was a time when your core provider could provide almost everything you ever wanted because it was a more simple world. I think the one thing you maybe didn't mention, maybe you did mention, is the one thing you have to look at is who's got a pulse on the future? Who's running 3 or 4 steps ahead of where you want to go so that they can get you there when you're ready to get there? The consumer has been so amazing as far as what they expect. They're putting together what the Netflix and Hulus of the world are doing, what the Ubers of the world are doing, what the Amazons of the world are doing, what the Googles of the world are doing, and what's going to happen in the whole generative AI space. That if you don't find a partner that's ready for those experiences, those engagements, that ability to move forward, and their lives rely on it as well as yours, I think that's important, more important than ever, that to find those specialists that really, really, their business completely depends on making you happy, but it also depends on making everyone of their other customers happy. There was no question there. I apologize. Sometimes I'll do that. But I think the reality is, at the end of the day, it's trust, and trust to be able to deliver ahead of where you want to go.
Yeah.
So speaking of the future, when you're looking at generative AI, and we're looking at APIs on a more legacy basis, how important is that when you're looking at a core modernization? Because right now we're already talking about cloud-based, but when you look at APIs, when you look at the ability to do for me to be able to implement a buy now, pay later on a legacy platform, it's not really easy. But to do it on a modern core, you can do that. How do you look at what you need to do and what you have to be ready for in the Gen AI and the power of APIs?
So I definitely think that there's something to be said for the key part of delivering not just generative AI, right? But any sort of ML modeling in your organization is really getting a handle on your data and being able to model against that data, being able to deliver insights based on that data, and whether it's being able to respond to real-time customer events or sort of do some analysis across multiple channels or across a customer that uses multiple products to figure out what to offer them next. I think all of that relies on having your data in a place that's accessible, leverageable, and then, of course, having an insertion point by which to deploy that model and offer it as a service. And so a lot of what we work on in Core is, how do I get all of my data in a place where it's accessible and where we can make it not just available to developers and customers, but help them by creating pre-built models to deliver services to them. So we have a payments risk platform, we have an ownership verification engine, we have an intelligent digital assistant, and all of that uses different types of AI in order to deliver new value to customers. And I think we would never be able to get there if it weren't for the way we've organized access to data in the cloud. And so as we think about the core as a cloud service, being able to provide the data and expose the data to customers, both so they can do their own modeling. So our clients, our banking clients, can do their own modeling, but also we can do modeling for them and deploy models that they can then leverage. I think that's a key point. And I think that's missed by a lot of the core providers because, core sort of went through, it originally started as something that looked a lot like a database. And then it ended up as something that looked a lot like a compute resource. And I think the real answer is that it's a mix of both, right? Cores are complex and it's a mix of compute and database. And so it's important not to over-index on either and to make sure that you have access to the data, can leverage that data, but of course are able to act on it as needed. And so figuring out that balance has been a big part of how we figure out what the core of the future looks like, because we know that cores are going to be different in 10 years than they are today, right?
I would imagine that Galileo has a little bit of an edge there in that you're already supporting a very modern organization in SoFi, and so their demands alone make it so all your partners benefit from what Derek's team's demanding of you. So it's kind of like that great balancing act. We have some questions from our web participants today, our webinar participants. One of them is really really good because I've been discussing it quite a bit lately. A core conversion is not an IT project. It is an organizational process. And it's going to involve virtually everybody in the organization, either directly or indirectly. We're now in a time where anything that we change to a modern perspective puts you in the mindset or the risk of, oh my gosh, am I going to be phased out because of this modernization? So you have some internal anxiety that you have to fight against. You have to do this every day. And I would imagine, because I see it when I visit financial institutions, you can tell very quickly in the room who really wishes you go away. But
Yeah.
you still need their partnership. And it's not that they're going to be vindictive. They're not going to destroy the process. But the reality is they're not on board. How should an organization move forward in a uniform way, in a complete organizational way, from the teleline, the customer service reps, all the way up to the executive office and the board? How do you get everybody pulling the same way? Because the last thing you want is a tug of war between legacy and modernization, because we already see what that does in a branch versus non-branch environment. So how do you do it in a core conversion process?
So I think there's an organizational behavior component here that you're asking about, and the other component you're asking about is so what is the prescriptive advice that I would have in this situation?
Yeah.
I think the organizational behavior component is right and it's spot on. We see that all the time. People are the custodians of
It's
infrastructure.
human. I mean, the
Right.
reality is it's
Yeah,
human.
yeah. And the truth is, it's human, but we talked about Conway's Law and sort of how legacy infrastructure influenced the structure of the organizations today. And so I think we have this concept that still exists where people are sort of the custodians of infrastructure as opposed to sort of the ownerships of services or have ownership over business problems that they help the business line solve. And so I think the shift there is around incentives. And I think there's a lot of conversation that goes on around KPIs or more modern form of that, which is OKRs, and how we can be aspirational about the problems that we're looking to solve for the business. I think a lot of that goes away when it's sort of, yeah, you used to own a fleet of 10,000 servers, but now instead you own all the services related to the following business. And how can we talk about organizing around that and modernizing that? I think the opportunity to be the champion around delivering new business value versus retiring old infrastructure and saving costs, it enables you to be the more favorable side of the Jaws ratio, where you're helping build the bank versus run the bank. And I think that's always a desirable place to be in the bank. So what I've seen is that helping build the next generation of the bank, while initially some stakeholders might feel uneasy, if management does a good job of explaining how this is sort of the next iteration of the bank, and that the key stakeholders in the last iteration of the bank are going to be a key part of the next iteration, they feel a lot more of that sort of psychological safety around being able to push back and participate and sort of disintermediate themselves in their previous role, because the custodian of infrastructure role is going away whether they like it or not. Embracing the new empowerment that management can provide them, and the new set of responsibilities around sort of what are these new ways that we're going to unlock business and be responsible for opening up new revenue lines. That's a great place to be in the bank. It's a great place to be in any business, and something that I think many IT professionals would desire. So in my experience, that's sort of the organizational behavior that I've seen, where it's like,
Yeah.
if management can shift that empowerment, then people jump on board because they immediately recognize that that's a better side of the Jaws ratio to be in.
I would agree. And it gets to communication. I mean, I'm sorry. The guy that or woman that has managed a COBOL process who learned that from the beginning is going to feel threatened. There's no way around it. However, you can communicate your way around that. If top management realizes they can't say, like we used to say in the old days, hey, either get on the train or we leave the station without you. That's not really a great way to do it, because these people come with amazing legacy thought leadership on things that have been broken in the past. They'll say, by the way, just so you know, we fixed something that you may not even see that's not going to convert easily into the new modernized core. You need that legacy thought leadership. The last thing you want to do is for these core people, these people that have been around for a long time, to leave before the process starts, because that serves nobody well. But again, it gets to communication. People are frightened of being replaced. They're frightened because what you're doing is you're taking away what they were best at. But as you said, and I try to say it as often as possible, is transformation is pretty damn cool, no
Yeah.
matter what age you are. I mean, I started my process of being a content provider 15 years ago now. It's amazing it's been that long, but that was to avoid becoming irrelevant. Not everybody has that mindset. I'm not going to say that's an easy mindset. However, if I had somebody to communicate, this is a good path to go, you're going to be okay. Don't avoid the conflicting conversations, because it will not serve you well in the long term. And it's got to be at the very top of the organization. Oh, and by the way, the top of the organization also have to feel comfortable with it, because they're also being threatened by what is going to happen and what they give away in a clouded environment. And I call it give it away because that's legacy thought. But David, I cannot thank you any more than I already have for all the wisdom you bring to me. Anybody who knows me knows this is not my strong suit. You continually make me more wise and make me more aware of the questions I should ask. But it's great to get together with you. As we say usually at these points of the webinars, we will share what questions we did not get answered, and we'll give you the answers to those. You'll also receive a recording and a link to the recording to be able to share it with other people in your organization. David, I appreciate you and your whole organization for continually making us more wise and to move us forward in the whole spectrum of modernization.
Jim, it's a privilege as always. Thank you.
Thank you.